Alt and MoneyControl present Wealth Generation through New Age Investments in India's Real Assets.
Hello and a very warm welcome to Alt and MoneyControl.com presents Wealth Generation through New Age Investments in India's real estate and real assets. Today's investors are moving beyond traditional routes like equities and fixed deposits, exploring new age investment options that offer diversification, access, and the potential for better returns. One platform enabling this shift is Alt, a tech-enabled investment platform giving individuals direct access to institutional-grade assets. With offices in Mumbai, Bangalore, and London, Alt offers everything from private credit and real estate to listed REITs across global markets via structures like Cat2, AIFS, PMS, and a GIFT City-based LRS fund. With over 300,000 users and $250 million in assets under management, Alt is using technology to unlock smarter ways to invest in alternatives at lower thresholds. And to help us decode this fast evolving space, we are joined by Kunal Moktan, co-founder of Alt. Kunal, great to have you with us once again.
Thank you very much.
Always a pleasure to speak to you.
Same here.
First of all, let's start talking about Alt, the public platform. What can you tell us about everything that you're doing now?
Right. So like you were saying, Alt is a tech platform that allows individual investors access to the entire universe of alternative assets. And alternative assets have become quite popular in the last few years. It's basically all those assets which are not the usual equity and debt and all of these assets that people invest in. These are slightly more alternative in nature and therefore they give higher returns, slightly riskier, lesser, not as liquid as let's say listed equities and bonds, but a very good alternate. More and more investors are allocating capital now to alternative assets. So Alt is a platform that gives you, like you rightly mentioned, a lot of access to these various asset classes, which we've now been running for almost 10 years.
For the uninitiated, we'll just do a round of understanding what we are talking about. So what are REITs, what are InvITs and SM REITs, and how are they different from equity or debt? I think that is one question anyone who's watching us for the first time would also want to know.
Yes. Some of these structures are quite esoteric in nature, therefore not very easy to understand. But over the last few years, decades even, some of these instruments have come into sort of more regulatory frameworks, and people are now investing more and more in these asset classes. So REITs, for example, have been around for a long period of time. They were started in the US in the 1960s and 70s. It's a way to securitize real estate and then list them on an exchange so that smaller investors can get access to that real estate through, let's say, units. And while this was around in the West for a very long period of time, in India, it came fairly late. It was only in 2014 that the REIT regulations came about in India, and the first REIT got listed in April of 2019, which is Blackstone, where I started my career. I worked. That REIT had assets which I had invested in when I was part of Blackstone. The second REIT was also a Blackstone REIT. And then in India, we also came up with something called InvITs, which is infrastructure trust. So the underlying asset that the trust owns can be very different. Now, while in the West, they've really sort of diversified. You could own a casino REIT, you could own a farmland REIT, you could own an office REIT, a retail REIT, a residential REIT. So the underlying assets are casinos or real estate or residential or office, etc. In India, we have REITs which can own offices predominantly and retail malls. We have Nexus REIT, which is listed, which owns predominantly only retail. We've got NDS, which owns only warehousing. And on the infrastructure side, you can own roads, anything that sort of generates income, which is stable in nature and for a longer period of time, like toll roads, for example, generate a lot of income. It could be power lines, it could be various other infrastructure assets. So those are InvITs. And then more recently, an asset class which we were very closely involved in, which was the small and medium REITs. We started something called fractional ownership back in 2015, and then I built that up over a pretty big business over 10 years. And then SEBI said, look, this looks like a great way to securitize smaller assets. Why don't you come up with a some sort of paper to let us know how we can do this. And then SEBI themselves, in fact, came up with a consultation paper. And last year in March, they came up with the SM REIT regulation. So a REIT can own any asset which is 500 crores and above.
Yeah.
But there's obviously a huge universe of assets less than 500 crores which have not been monetized. SM REITs can therefore own anything less than 500 crores. So in this universe, you got REITs, you got InvITs, and you've got SM REITs.
I think last when we met, we were talking about SM REITs,
Yes.
and I remember we spoke about the risks, we spoke about the evolution, we spoke about all of those things. But while we'll come back to it in a little while later, I am just intrigued to pick your brains on. You've been in the similar kind of work and the industry for so many years.
Right.
How do you see the last 10 years? How have things evolved? And what has worked in favor of, now these assets that are totally democratized for everyone and not just, say, perhaps HNIs? I see that as one of the things that has been totally fascinating. But tell us about what you noticed in your journey and working in this field, and what has been the most fascinating thing.
Yeah, a lot of things have happened in this sector and in this field over the last 20 years. I started in 2007 when Blackstone was trying to open an Asia office, and investing then is very different from investing today.
True.
Those days, for example, we were not allowed to buy completed office properties at all. It was only greenfield development, and we could only buy land and construct and so on. India didn't have that many office buildings at the time. The total stock of office buildings, which today is 400-500 million square feet, at that time was not even 100 million square feet. So, we had pockets of developments in places like Bangalore, which had seen the tech boom, and therefore people like Infosys and Wipro had built big campuses, and then all the large multinationals which came to Bangalore when the BPO boom happened in early 2000, those sort of multinationals were building, like Cisco, for example, or Microsoft. They were building large office buildings. Developers like Embassy were a big part of that development. And as this market grew and developed, private investors like Blackstone, KKR, etc., who invested for their LPs, took the first sort of dig at it, but normal investors couldn't sort of invest in them. So therefore, the whole REIT revolution, where people said, okay, securitize this so that normal people can now own a piece of that asset. So a huge amount of innovation has happened in this industry over the last 10-15 years, mostly to do with regulation.
Yeah.
But also the fact that there was more disposable income. India itself sort of grew a lot during this time. There was a lot of interest from international GCCs, as they call it, to come and set up in India at much lower cost. They had great access to engineers and talent, and therefore they came and started occupying large spaces like Google, Apple, etc. Right? So when that happened and real estate started getting built, the next best solution was to monetize that real estate, which happened through these various sort of structures. So all of this journey has been very fascinating for me. Of course, I've been involved in the institutional investing side for many years initially, and then on the tech side of things, which is very different, where Bangalore is the sort of epicenter of all the tech activity, and how entrepreneurs have disrupted various things is phenomenal to watch. Of course, we were one of them trying to do that on the real estate and alternative investment sides. That's been very gratifying, satisfying the way it's worked out. And now, launching something completely tech-based, that has been
on your fingers, literally.
Absolutely,
and I think that makes such a big change. I think even the investor psyche has changed so much. And is that the reason why these asset classes are becoming more popular? Because people want to diversify, they have more appetite, they're not risk averse perhaps as they were before? No,
absolutely. See, earlier, in the early 2000s, even mid 2000s, the only investment opportunity for any investor really was equity, stock markets, or bonds or fixed deposits. There were no real alternates to these traditional forms of investments. Then mutual fund revolution came in, and SEBI played a big role in that, the setup of AMFI and so on. And people started understanding what mutual funds mean, which is in a way securitizing publicly listed companies. So instead of owning the share, I can own lots of shares through a mutual fund. And that caught the fancy of a lot of investors. But ultimately, the underlying was still an equity share or a bond of some sort. Then investors started saying, look, in the West, people have so many different types of asset classes, and I may not be someone whose the risk tolerance is high enough to, let's say, invest in stocks, or I don't want to be so conservative to invest only in fixed deposits or government securities. So for me, I would like to have some sort of a hybrid security which gives me coupon on my investment and a capital appreciation kicker. And for this, the best asset class or a security is a REIT, because a REIT gives you 8-9% rental yield paid annually. Even an InvIT, SM REIT, and at the same time, the underlying asset value appreciates, and you also make return on your investment. So Embassy, for example, listed at 300 rupees in its IPO in 2019. Today, it's at 400 rupees. So it's 33% gain on the stock price. And during that time, they've given almost 130, 140 rupees of dividends.
Right.
So you made 400 plus 130. So it's a much safer asset class to invest in. It gives you continuous coupons. So it even works for someone like a retiree in his 60s who doesn't want all his investments in fixed deposits, which is not inflation linked. Whereas here it's inflation linked, because the rents are going up every year, and therefore your yields are going up every year. Plus you have the capital appreciation kicker. So the HNIs and then the sophisticated investors came first, and now retail investors are also part of this big revolution.
What kind of returns can investors expect from all these classes?
So from a REIT, the yield is typically slightly lower, 5.5–6% of your investment. So let's say you invest 100 rupees, there's a stock price, you get 5 or 6 rupees per year in the form of dividends. So that's 5 to 6%, and then you get capital appreciation. In the case of InvITs, the 5 to 6 is actually close to 10 to 15%. But there's a catch there, because at the end of the InvIT's tenure, there is going to be nothing left for the investor, as in the sense that if it's a road toll, it's usually a 15-year toll, or a 15-year contract, or a 15-year concession, as they call it, that they have from the government. After which the government is going to take back that road and give it to somebody else. So if I earn only, let's say, 10% on my investment for 15 years, I would get 150. But then it would become zero at the end, because now the concession is over. So therefore, the yield has to be higher to compensate for that. So in a way, capital appreciation is lesser in the case of an InvIT, but the yield is higher. So there you would make, again, overall you would make the same returns, but more the component of yield is higher in an InvIT. An SM REIT is slightly smaller than a REIT, and it owns single assets, and therefore the yield is higher than a REIT. It also is not allowed to own any under construction or land assets, and therefore you don't have to compromise a portion of your value in land. So what I mean by that is, a REIT, let's say, has 20% in land. That does not generate any income. Only the 80% generates income, and therefore the yields are slightly lower. But in an SM REIT, the 100% generates yield, and therefore the yields are 8–9% in the one SM REIT that's listed currently. So these are the returns that investors can make from this product.
Every time we talk about a new asset product, there are experts, there are naysayers, and there are people who want to take a guarded view on this, and they always say that not all products are suitable for everyone. And here we are talking about moderate to perhaps high risk investors. But if I were to ask you, according to you, who should be investing in these products, do you actually say that there is a section that should not, or do you feel it's because you just mentioned retirees and they're very careful about so I'm intrigued to know, is it then is there a product for each one of them?
Yeah, like I mentioned, I wouldn't call this a very high risk product. I would say this is a moderate risk product, definitely not as high risk as equities. So if equities is really high risk and government securities is the least risky, then this sits right in the middle. In fact, if you look at the returns that this product has given since 2019, when this whole industry was formed, since then, if we map out the returns, and we've done that in the white paper, which we'll probably discuss later, it's equities have given 124% returns. If you had invested in government securities, you would have made 45% over that 6-year period. And if you had invested in REITs and InvITs, you would have made somewhere right in the middle, 84%. So not much away from equities, and much higher than sort of government securities. And therefore, the risk profile sits right in the middle there of people who are not as risk tolerant to invest in, let's say, equities, and someone who's not so risk averse that he wants to invest only in fixed deposits or government securities. It's there for anyone who's in his 30s, who's just started investing, as well as someone like a retiree in his 60s who wants not just regular coupon,
Right.
but also some sort of appreciation linked to inflation. So I feel like the hybrid nature of this instrument makes it sort of suitable for every kind of investor.
I think it also needs to be spoken about a lot,
Yeah.
because a lot of times people are unaware.
Right.
And I think when you run large scale campaigns to educate people,
Absolutely.
and I think that sort of makes the huge difference.
The best example of that, sorry to sort of butt in, is mutual fund
Of
sahi
course,
hai,
sahi
right?
hai. I mean,
So,
it
I mean,
became such a tagline.
It became the tagline, and then everybody sort of understood
Correct.
what mutual fund is. So AMFI did a great job of educating investors. Of course, it takes time.
Yeah.
And similarly on this space, you got the Bharat InvIT Association and the India REIT Association, and now the SM REIT Association, which is sort of coming out with content, educating investors and so on. And just with time, the fact that they've been around for so many years now, and a little bit of regulatory help, which is actually, there's been a lot of regulatory help in this matter. SEBI has now said that from 10% mutual funds can invest 20% in REITs and InvITs. So that makes a big difference. That's a double allocation. So, you know, those things make a big difference.
Shows their belief in the product, on the safety, everything. Was that one of the reason Alt released a white paper as well? And what were the findings? Because you are at the forefront of this work, and it's only right to research, to find out more, explore more, and bring it to people, those findings. Tell us more about that.
Exactly. So that's the whole sort of investor education series, or educating people about new products. We know that the regulator is very, very positive about REITs and InvITs. They feel like this is going to be bigger than even the stock market, which could be true because Indians love investing in real estate. India has a lot of infrastructure currently being monetized and so on. It's a developing country, so a lot is being built. And therefore, this was part of that whole initiative where we said, look, this is a great sector. This is something that people should be investing in. You know, we don't have InvITs or REITs, but we feel like people should know about them and understand them. So we said, first, before we telling them what to do, let's go and see exactly how much returns they've given, what kind of regulations have come into force, how much returns can you make from these instruments, how safe they are, who are the sort of people in this industry, and so on. And then we sort of went into this white paper in detail, which we've now released, on how much returns they've given, the regulation, who the players are, and so on, and what the industry holds in the future. That's the reason we came out with this white paper.
Fabulous, and it's available for people to have a look at. Wonderful. Who are the key players in the space?
So on the REIT side, we all know the key players. Blackstone is a very big player on the REIT side. Out of the 4 REITs, they've sponsored 3 of them. KKR has sponsored, Brookfield has sponsored one of them. And then the next one that's coming up, the Salarpuria Sattva REIT, is also a Blackstone sponsored REIT. That's for Hyderabad assets. We know that Bagmani Group is also sort of has also filed for a REIT, or is looking to file for a REIT. So that's going to come at some point of time. Blackstone has other large assets like the Prestige portfolio that they purchased a few years ago for 9,000 crores. So that's a big asset that would come in the future. But currently there are 4 on the REIT side. On the InvIT side, there are 5 public REITs. There's IRB, there's Power Grid, there is Indus. So there are power as well as roads, infrastructure, etc. And there are also a lot of private InvITs. There are almost 6-7 private InvITs, which are not publicly listed, but they are still privately owned, and SEBI is pushing them to now come up and become public. So those could add another $5-10 billion of market cap into the industry, because today InvITs are about $25-30 billion of market cap. REIT is about $12-15 billion of market cap. In the US, it's $1.3 trillion of market cap. So we are very, very far from where this industry can reach. And therefore, that's why the reason why the regulator and everybody else is so sort of positive. And on the SM REIT side, Property Share is the only one which has listed PropShare Platina in December. That was a landmark listing, first SM REIT ever in the world that's currently trading. And now the second scheme has been filed, and that should open in a few weeks.
Yeah, that's what I wanted to talk about. That's the new product in the space, also bringing the SEBI regulated SM REIT.
No, that is the first product.
That was the first product.
That product is already
what's
sort
the
of
next
live.
one?
The new product that we are bringing in this space is a portfolio management scheme, a PMS that's going to invest only in these sort of REITs, InvITs, and SM REITs that I just spoke about. So nobody is doing it right now. There's not a single PMS that's sort of investing in REITs, InvITs, and SM REITs. There's a very good universe of assets out there for people to invest in. What you need to know is which ones to choose, which REITs to invest in, which InvITs to invest in, which not to invest in, which SM REIT to invest in. and why, how much to allocate in each of these, so that my returns are, let's say, 8 or 9% plus capital appreciation, because you can't just go and blindly buy all of the assets that's available. Somebody needs to do a very deep dive analysis of leverage, management, corporate governance, dividend policy, financials, the underlying asset. And who better to do that than us, because we've sort of been looking at the underlying real estate for such a long period of time on the private side. So the new product that we are launching is called AREITs. It's the Alt REIT InvIT PMS scheme. And that is something we'll probably launch in a few weeks' time for all investors.
Wow, exciting times ahead.
Yes, it is.
Any last word for our viewers?
Nothing much. Thanks a lot for having me here again. It's always good to be here and talk to you, and especially about new products. Hopefully, this is something that's going to lead to more investor interest in this amazing sector that is growing every year. And yeah, I mean, if there's any questions, etc., that they have, I'm happy to answer them, or my team is at least on altinvest.ai.
Fantastic. Always
Perfect.
A pleasure speaking to
Same
you
here.
And upwards and onwards.
Thank you very much. Thanks.
All right. We hope this conversation helps you explore new possibilities in your financial journey. Thank you so much for watching.
Alt and Money Control present wealth generation through new age investments in India's real assets.